Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show, but I'm going to tease and give you some hints about the company which will be coming to KYC today. The first hint is it's a Mumbai-based company and it deals in the IT infrastructure space. What is the product profile? That's something which we'll look out for. The key clients also we'll look at that. And the stock, that's up 21% in the last 1 month. Key clients, they include Oracle, Microsoft and Apple. And looking at the recent order flow, almost a 250 crore order has come to the company from RBI. So let's guess the company, what it is. And just to give a smaller hint, on the social media, we did tease you a bit early in the morning. There was a dinosaurus photo as well. But the company in focus is Dynacons Tech. Let's put this company out on screen, and this is the one, Dynacons Systems and Solutions. This is the company which we will be talking about, but there are the reasons. Why are we calling this company? Why is this not discussed amongst the analysts? And this is one of the major reasons, why we are calling this company is it's largely untracked by analysts and there is literally no institutional participation. Let's pull out the reasons for why we are bringing the company. And this includes recent order wins coming in from RBI. We will be asking the management on that. Apart from that, also let's see which other segments are they actually working for. And let's see, another point is that the exact business model, what it is. Is it a service-based company? Is it a product-based company? A lot of concerns are there because the company is all over the place. So we need to understand what the company is actually all about. What are the benefits coming in from cloud adoption? Is there a second order effect at play? That is something we'll watch out for. Of course, AI transformation, is this a big industry trigger? And if that's there, is company at an inflection point because of that? That is also something which I'm wondering about this character. Also the margin guidance, that's ahead for 2027. Will that remain as what a normal SaaS product or an IT related company has, or is there a difference here? So we need to check on that. And of course, it's a very interesting analysis lined up on the valuations and its peers as well. On the show today is Dharmesh Anjaria. He's the director of the company, and interesting details about him. Of course, he's a CA and a cost accountant, but 28 years in this IT industry as well. So that is something which is very much important. And also talking about that, we will be also talking about his key other details also. And that, of course, is that a good support is coming for his street credit. But moving on, let's just talk about the company. What's so much important? It's incorporated in 1995, Dynacons. This is the company. It's a Mumbai-based company. Also, it provides IT infra and related activities. Looking at the services, they include infra designing, consulting, turnkey system integrations, which are very much important. And they have secured a prestigious software project from RBI as well. So that's something very important update coming in. And going ahead, these are the key clients which will be important: Oracle, Microsoft and Dell. And apart from that, the network and security, Cisco, McAfee also make it to the list. And you could see a large amount of players are there in this space as well. So 3 business categories and 3 different types of clients which are there for Dynacons system as well. But just explain you the entire rating process, how these things happen: the income statement, balance sheet, cash flow, return ratio. These are the 4 parameters. Apart from this, the other 4 parameters include shareholding, street cred, which is nothing but the stock reaction which has happened 1 month, 3 month, and also the you could say 5-year basis. Apart from that, valuations, we compare them with the peers, and the outlook, which is very much important for this stock. So totally 8 rating parameters are there where we'll judge the company. Okay, so the first one is of course the income statement. That revenue is almost 1,000 odd crore rupees, but it has been significantly growing up, and 3-year CAGR is very decent. It's at around 25%. Over there itself, EBITDA also, if you have a look at it, that itself has also jumped almost 50%. Net profit, that's a significant up move coming in, and that's where the strength is coming in. I checked the H1 numbers also, and they were on the stronger side. So net for the income statement, I will be giving this a positive outlook. Also, let's just show you how the balance sheet actually comes out for the company itself, and it's very important to see 2 important factors. Actually, the book value that has actually significantly gone up from 105 crore rupees to FY25, it's around 231 crore rupees. Another important ratio is the cash bank balance, and that has also gone up. That means it's showing some good liquidity as well. So it's a thumbs up coming in. Also, another category is the cash flow segment. Out here also we are seeing that the PAT that has significantly done well from 33 odd crore rupees for FY24. It's moved 54, then 72. That means the important number, the PAT number, that is doing really well. And there's an interesting segment called the cash flow conversion to PAT. That has also been growing up very nicely. The net cash flow, that's also done really well. So it's a thumbs up when it comes to the cash flow statement as well. So overall, looking at the entire picture, I would say that the first three ratings from the financials front, they have done really well. And that's why 3 thumbs up has come. But now will this sustain? That's the question. And now the question, more questions are coming. The ROC numbers, generally the ROC numbers have been growing up and now it has plateaued but actually come down also. So of course the criteria remains. So when a company is having this strong ROCs and they're on the upside, that gives more alpha in the future. But let's pull out the ROE numbers also and see what's happening. Is it same as ROC? Actually, this is the return on net worth. This is also actually kind of plateaued around 31 odd %. So of course at times the seasonality also comes in and issues come, but net I would still give a neutral rating because it's still on the higher side for an investor. So that is a good point, but it's plateauing, and that's the reason why I've given a neutral rating. Apart from this, let's move on to the shareholding segment, and that's where my concern starts coming in the company. Promoters are holding 61%, we know that, and the public is there 39%, but the real stress, or you could say that the discovery of this stock has not happened amongst the analyst community or even the fund managers, and of course the market cap is also on the lower side, is there is no institutional support. So in case an institutional support comes, then there might be a re-rating also in the stock. But as of now, since there isn't, I have given a strong thumbs down to the stock for the shareholding pattern segment. But apart from that, the shareholding pattern segment, I would like to talk about the other segment also, which would be in focus, and that is the street cred. The stock is up 21% in the last 1 month, and that's where our interest came in to call this company in our KYC show. 6 months, nothing much has happened. Stock has largely been flat, and over the last 1 year also, we see the stock is still down 30 odd %. Some kind of a technical breakout also coming in the last 2 to 3 odd months. But 5 years, you see, stock has been a multi-bagger. It's up 1400 odd %. But the stock, 1 year basis, 2 year basis has taken a rest. But net, it's a neutral rating. And when it comes to the valuations, there's a lot of concern. You must be wondering why so much, differences in the valuations. That's the query. Market is also confused regarding this stock, whether it's a product company, service company, or it's a SaaS company where most of the valuations have actually corrected down. So I've taken the nearest companies which are there, and of course Agility, Affle on the higher side, and other peers also, if you can show, they are also on the higher side if you compare that with Dynacon. So it seems like there is some mispricing in this counter, or is it that it's not commanding the premium which its peers should do? So that's my concern as well. But net, it's still cheap. If you look at the stock, it's 12 months trailing PE at 18 times. So it's a neutral rating when it comes to the valuations. But apart from valuations also, let's see the outlook. That's very much important for the company, and that is something in the future. AI would be very much important. Each segment I'd like to point out the security and the networks order in outlook, what it is going ahead. People need to understand what the company is actually doing. It's a very, very broad definition which the company claims that it's there in that business. Also, let's see the data center and the large scale network. What is company doing here? What's the potential going ahead? And if they can quantify that, then it will make a lot of sense, to have that company in the discussion. Also, the revenue margin growth guidance for 2027, where does it stand? Does it go past that 10% mark for the margins on the consolidated basis? That's what we'll ask Dharmesh. And AI adoption. Company has mentioned in their annual report, a big paragraph was there, I was reading that, and AI adoption is likely to accelerate. And when this happens, there is a huge jump which can happen in most of the company's dynamics. But will it happen to this company or not? All those details we'll ask Dharmesh Anjaria. And of course, let's give you the total, outlook currently of what I have given of the company. And largely we see The revenue, income statement, cash flows are very good, so I've given a strong thumbs up over there. Return ratios, they need some more time when things start coming in. Also, let's pull out the other parameters, what numbers we have given. And this includes shareholding. That's where my biggest concern is. There isn't any institutional participation there. Street cred, decent enough, and last 1 month it has done well for the investors, 20% up. Valuations, cheapest amongst all. But does it, require a premium on these levels? That's what the street is confused about. And outlook is very strong. Maybe an proxy play to the AI, the second order effects, but largely undiscovered stocks. So net on a higher side. On our KYC ratings, we have given 5.5 out of 8 when it comes to Dynacons system. Apart from that, now let's move on to get the management in. And of course, we are having Dharmesh Anjaria. He is having 28% years of leadership experience in the IT segment. He's a qualified CA and a cost accountant. And interestingly, he has represented India at the World Summit of Young Entrepreneurs in Brazil as well. So one man wearing a lot of hats, and joining in is, of course, Dharmesh here. A warm good afternoon to you, Dharmesh. And I'd just like to ask, about the company itself, largely undiscovered, and that's mantra of our KYC show, one of the first channels in media to get these companies to understand what's missing or what's actually there. First of all, just explain us what your company is. The market is very confused. It's a product company, tech company, all-in-one company. What this company is actually?
Hi. Thank you for having us over here. And Dynacons, we are committed to empowering digital transformation among enterprises. We are a system integration company. We enable the IT infrastructures for large enterprises there. Under our system integration, we cover 4 areas: data center and cloud, network and security, covering cybersecurity as well, workplace solutions, and managed services, covering all these areas. So this is uh, what our business encompasses.
All right. Dharmesh, apart from this, there was a recent order win from RBI as well. It's a roughly 250 crore order coming in. Just like to get your view on that. Is overall, what's your order outlook looking like going ahead? Are we going to see more? Because I'm thinking in the month of December itself, the order flows have started coming in. So that continues in Q3 also?
So we've had a decent order pipeline and good order visibility, where we are confident that the momentum and the growth that we have showcased in the past, as you have shown in your show, that we've grown on a CAGR of 25% year on year. We are confident that the growth momentum will continue there, and we are seeing significant orders coming in. We have three major customer segments: BFSI, public sector, and global customers. So these three customer segments are all, really empowering the entire digital transformation that India is going through currently. That, as you know, BFSI is leading in this entire digital transformation spree there. So this is where we are very confident there. And what we have done is, while we do under system integration, we cover everything from data center to workplace. We specialized in certain areas like core banking as a service, private cloud solutions, SD-WAN deployments across the country, their IT
Yeah, Dharmesh,
lifecycle management services.
that's an
Sorry.
important point you had mentioned about it. But Dharmesh, speaking of these three segments, which is the segment which is having a high margins? I presume around 9 odd percent margins have been there on a long-term basis for the company. In the high margin way, are we looking at next 2 to 3 years changing your product profile, or if itself the work is so huge for all the three segments which you are stating about the company, what would be the overall margin profile looking like? I want a margin revenue guidance. Maybe a range would do.
Yeah. So the data center and network and this security business and cloud business is growing for us, and these are high margin projects there. So hence, we have already been growing our margins by the large projects that we have undertaken, and we expect this margin profile to improve further.
So this margin profile, it can touch the 9 to 10% mark also in a 12 to 18 months.
Yes, we expect a double-digit EBITDA margin profile.
All
Yes.
right, so from 9, it comes into the double digit. Okay, that's an interesting take. Your clients have also, kind of moved up. Marquee clients you have. I checked your annual report. There was Oracle, Microsoft, Apple, IBM, all over the place. But are
So,
these contracts the larger ones or these are smaller ones? I just want to know that.
so our contracts, our customers, are the large BFSI companies like State Bank of India, LIC, Reserve Bank of India, Union Bank, Punjab National Bank, ICICI Bank. Then we have global customers like Meta, Amazon, S&P, Gartner. Also, we have large public sector enterprises like GNFC, Mumbai Municipal Corporation, CRIS, which is Central Railway there. So we have a whole large set of customers which encompass all, whether it is BFSI, public sector, or global customers.
All right. But Dharmesh, apart from the customers themselves, looking at how the momentum is happening, in the global order schemes, client budgets are also being made in the year end. Already 2025 has passed, so the new budgets are coming in. So the inquiries,
Right.
how are they actually coming in from the global markets, especially the US market?
So, the India is, you are all aware that how the Indian economy is shaping up, and the Indian economy is doing very well there. Both BFSI and public sector is growing. Global customers are increasing their presence in India in either sell to India or growing their GCC presence in India there. So those are all, large opportunities for us. AI implementation and cybersecurity and cloud, these three pillars will also drive the next wave of growth for us there, which they're already doing.
Dharmesh, I'd like to pick you on the cybersecurity front as well. A lot of government initiatives have started coming in, and even the regulators are taking a very, very serious look into this going ahead. So now this segment as a whole, earlier it was a very commodity type of a segment. How much it is getting specialized into, and how your company is benefiting from it?
So, security is, I think it's the entire landscape is changing there as far as security is concerned. It's a very, very important parameter that every enterprise needs to look into. The amount of security threats that we all are getting, and especially with AI around, there is a lot of data which is getting into all the AI models there, which is increasing the security threats that are open, that enterprises are open to. So today, Dan, for us, this is a very, very big opportunity. We have a AI-enabled knock and sock where we are able to use AI to help customers mitigate these threats, and we can provide a comprehensive coverage to enterprises around the same.
That's interesting, Dharmesh. But AI is, at the inflection point of a lot of industries. We saw that in US. Interestingly, I read a paragraph also in your annual report as well. Generally, a product-based company doesn't talk about a lot of AI as a separate, because it's a part of it. But you have given it separately as an inflection point as well. So if that inflection point comes, second order effect kicks in, how does the company benefit? And will it be like just one shot, a big move, or will it be something like, a gradual work which you'll be getting due to AI?
No, see the entire AI, infrastructure. AI is going to help us in a lot of ways because of all the AI implementations that enterprises are going to take up. There is a lot of AI infrastructure that IT infrastructure that these would be requiring in terms of workloads, in terms of the GPUs, in terms of all the mandates that they would need to cover all the AI infrastructure there. Plus, with the DPDP Act and the RBI mandates, enterprise would need zero trust, micro segmentation, and data sovereignty solutions, which are all integration heavy. All of these would require system integrators like us to help provide the required solutions.
All right. And Dharmesh ji, question is, what's the normal timeline, for the payment, the moment, you get an order? And just you can divide it between the domestic and the international clients. Domestic, the B2G ones might be at having a, a higher payment cycle. So just give us those numbers, the payment cycles of your customer profiles.
So for the domestic customers, we generally work on large scale projects, and these projects are all milestone based projects there. So typically there is a go live period, and then there is a O&M period where these projects are typically over 5 or 7 years. So the go live period is typically around 9 to 12 months for the project there. And these are milestone based, so there could be certain milestones on implementation, certain milestones on go live, which is there, and then balance would be on operational on O&M basis. We also have core banking as a service project that we have won for RBI. We are doing a lot of as a service projects. These are, annuity based projects there, where the revenues will come in over a period of 5 years.
All right. Dharmesh, just to simplify it for our younger audience, especially Gen Z, they generally want things in a very simple manner. Like suppose your company is there and I am an Indian MNC company in front of you. What kind of, services you are actually giving? Now you enter with multiple services, multiple arms around you. So if you have to just give, if you have to pitch yourself that, hey, I am coming to an MNC, these are the services from my arms, what would that be?
Yeah. Well, we are a one-stop IT solution provider for any organization. We will help you set up your data center, help you in your cloud strategy, uh, help you, define your network there, and help you build your network and connectivity across India. We will devise the entire enterprise security for you there, and also manage the entire security over the entire life cycle. We also provide managed workplace solutions where we will help you with the entire journey in the entire through the IT life cycle. And we provide all kinds of managed IT services and professional services. So in short, we are a one-stop IT solution provider for any organization looking to expand their IT infra. And we will help you through your AI journey as well as your cybersecurity journey.
All right, so it's a one-stop solution for the IT infra space and the AI journey as well, because AI journey is something which all the young viewers of KYC keep on asking me, and that's one of the first questions that's my duty to ask. And of course, the AI journey is there, the India's IT infra journey is there, but the market has not discovered this stock. And now let's just discover it, where it's actually standing, and we have taken out from our research team's analysis, we have given a rating to the stock for Dynacons Systems. Income statement, balance sheet and cash flow are really strong. This is the past data which we have analyzed. So I've given a strong thumbs up to all these three criteria. Shareholding, that's the biggest concern coming in, as there's a lack of institutional participation. Perhaps more discovery can happen on this stock when we discuss them. So net, I have given 5.5 out of 8. The valuations are very attractive, it seems, for this counter, but the company has to show, whether it's a commodity side of the IT business or the specialized side of the IT business. And if the company claims that it's the one-stop solution for IT infra, then we should be looking at larger orders also. Right now also they have started getting large order. Roughly the market cap is 1300 odd crore rupees, and they got a recent 250 crore order as well from RBI as well. So let's see, what happens overall, and net, it's a 5.5 out of 8. Dharmesh, that's all for today. Thank you very much, Dharmesh, for joining in, giving the entire views and perspective about Dynacons, and wishing you and your entire team a happy Merry 2026. So that's all, folks. Thanks for tuning on to KYC today, only on NDTV Profit. Stay tuned.